and a warm welcome to this Master Investor Monthly Mashup, a name bravely suggested by Jonathan Davis, the author, investor, podcaster, editor of the Investment Trusts Handbook, my partner in crime in these podcasts. And Jonathan, I reckon you're evil and that you chose the alliterative title, A, just to see if I could say alliterative, or B, if I could say Master Investor Monthly Mashup and see if I had my teeth in, which obviously I don't today.
Well, of course, I was trying to catch you out. No, of course, I wouldn't dream of doing that. I'm not sure I've been any much better at getting the words out of my mouth either. But I thought it was a good, good representation of what we're trying to do here, which is to, pick up on some serious things and pick up on some not so serious things and put them in the pot and see what comes out.
Well, in terms of what's coming out, we are fast approaching May. In fact, many people will be watching this the first week of May. And there is that ancient trading strategy, sell in May and go away. So the idea was, I think, that you sold everything, you had a lovely summer, basking in the profits from your portfolio, and then you started all again in October. But I think the last 3 years, people are just selling, going away. So yeah, I think we can put maybe that trading strategy to bed, the sell in May.
Well, it's an interesting one, that, because it is an old market adage, as you say, and certainly in this country, it was often associated with the big racing events of the year, the Derby and the St. Leger and all that sort of thing, and the fact that back in the good old days, which I'm talking about the kind of 19th century, nobody did any work between May and the end of September. Parliament didn't sit. The Prime Minister went away, and Gladstone used to go away and chop trees and things like that, and go racing and do all those good things that one does. But actually, I'm not so against it as a market adage. I mean, it's difficult to prove statistically that it has any validity, but I think it's got a little bit more validity than that. It certainly often worked for me in the sense that the things that have changed that in most recent years, there have been some number of crises in August in particular. I'm thinking back over sort of 20, 30 years. There's quite often been things that blow up in August or maybe September, and that kind of throws the markets into a lather. And that is often a good time to get back into the equity markets, at least. But it's the other factor which I would think is relevant these days is that because of ISAs and the introduction of the ISA regime, a lot of people leave their decisions about when to put money into the market until the end of the financial year rather than the end of the calendar year, and that sort of creates an effect which could encourage quieter markets during the summer. So I actually think there's quite something in it. And if you are an ISA investor, then I think I mentioned this last time or the time before, it's actually quite a good idea to get your money in during the summer, particularly if there are signs of weakness in the markets, rather than leaving it to the last minute when prices will be often higher.
Yeah, I agree with you. I think I'll be spending this summer, or in fact the next month, I've got a wren nesting in my garden. So there's part of my garden that I can't go anywhere near for a month. So possibly that's what I will be spending the next month doing. But I'm still recovering from the Master Investor Show in a really good way. There was a really elegant buzz about the show this year. I know we were all worried about it because we had to postpone it because of the rail strikes, but we had a huge audience. We had some terrific panelists, and what I was getting a sense of was the democratization of asset classes, and the free and willing dispensation of advice. Now, whether that's because we're in the golden age of the guru, where you're either taking advice, seeking advice, or giving advice, I'm not sure, but I really felt as though people were, and not necessarily to benefit themselves, but they were dispensing some really terrific advice.
It was a good event. It was very good to see so many people coming through the door. I noticed that because I had the first session of the day, and there were still people sort of coming in, while I was had to set off. So but that was good. There are lots of people, big turnout, lots of people to meet, lots of people to talk to about things that have been doing and saying, and some great speakers, as you say. The only negative on my side was my own stupidity in blundering into a meeting, believing that I was the host of the meeting and being discovering that I wasn't, and looking rather foolish as a result. But that was my stupidity. But it was a very interesting session. It was a kind of a panel session, and one of the questions that came up, which I thought was quite interesting, was a gentleman who said, if I don't know, he said, when China invades Taiwan, should you panic early? Okay, so this is another old kind of phrase, it's better to panic early. If you're going to panic early, which is actually very good advice for investors, I think. If you follow it, if there's a big kind of market blow up and you're not sure whether it's really bad or not, there's something to be said for if, as I said, if you're going to panic, if you want, the first decision to sell immediately rather than sit around waiting to find out whether you should or you shouldn't. Because if it is bad, then you've left it too long. That's often been the case with specific sort of corporate blow-ups, where a company suddenly comes out with a shock announcement. It's often the right thing to do if that's a total shock to you to sell out. But the key part, of course, this gentleman asked very interestingly was when China invades Taiwan. And of course, we don't know when China is going to invade Taiwan. If you do know that China is going to invade Taiwan, then yes, you definitely want to be panicking early, because the markets already reflect that. And it's very unlikely, but the reason why I thought that was interesting, because if you think back to the Russian invasion of Ukraine last year, okay, which came as a shock to many people, there were people who it later turned out that had warned exactly of the risk of this, even if it was a minority risk. But when it actually happened, if you'd followed the advice of panicking early, and you saw the implications, you would have been, at least you would have helped to minimize the losses that many investors otherwise suffered. Problem with that approach, of course, you then have to decide when to get back in again. But putting that on one side at the moment, I thought it was an interesting question and an interesting thing to bring up. So that was a good point for me.
That would have, I wish that I'd blundered into that particular panel as well, but I was probably hosting my own, and I hosted the alternative investments panel, and there was Cult Wines, there was Minter, Splint Invest, and basically these three companies allowed you to own, in the most real and loosest sense of the word, to own fine casks of whiskey, superior handbags, although I'm a rucksack girl myself, Warhol's, fine wines, and it ranged from your minimum investment ranged from £50 to 1,000 to 30,000. And all these three chaps, none of them were English nationals. And I'm not being racist, but it was just interesting that it was three non-UK domiciled companies that were offering gateways into luxury goods, which I thought was very interesting. So I'm wondering if that sort of British Reserve doesn't allow us to have anything similar, but very, very interesting. And yeah, I was tempted with the £50 investment into the delicious whiskies. It will take too long for me to explain, exit strategies and the return on investment, but that was really good fun. And 15 minutes with three super guys wasn't long enough.
Yes, but that's an interesting point. What do you make? I mean, it is true, I think, that one of the great things of the last 15 years since the global financial crisis has been people's recognition that there is scope to invest in alternative types of asset which they might not have considered before. The rich have always known about the value of investing in some of these alternative assets because they can afford, to lose money on some of them, maybe. I mean, the issue there, I think, for investors is, yes, you can improve, diversify your holdings by investing in strange non sort of listed equities or bonds and that kind of thing, non-financial assets. But you have to be quite careful on the old small print. I mean, that's the thing, I think, which is the message one has to give out. You've got to watch the small print very, very carefully, because at the end of the day, whether it was timeshares or something like that, if it's unregulated, or if it's regulated but the fees are not transparent, you've got to be quite careful before you plunge in, and you need to be able to get your money out, as you say. But yeah, absolutely, very, very clear message. The wonderful man David Swenson, who manages the Yale investment portfolio, pioneered the argument that you need to look at investing in alternative assets as well. And of course, you can do that through investment trusts in some cases, and also through some specialist funds. So yeah, that's interesting. Well, I'll be happy to come round when you've got your whiskey. It probably takes about 10 years to go up in value. So make a date in whenever that is, 2033. Come round and sample your whiskey.
That would be very good indeed. But 2 out of 3 of those companies were FCA regulated, so it provides a little bit of comfort. There was comfort for me towards the end of the show. I attended the last panel, and it was filled with youth. And there was one chap, Michael Taylor, who's very young. He's become a bit of an investment guru on Twitter. His handle is @shifting_shares. And he's another one who dispenses of really good common sense advice in a very sort of harmonious, easily digestible way. So I'd been following him for quite some time. And it was the first time that I'd heard him speak, and I had an epiphany. And at the end of the panel, I went up to him and I said, "Do you live in Seaton Carew in Hartlepool?" And he said, "Yes." I said, "Is your house near the Staincliffe Hotel?" And he said, "Yes." And I was really mean, because he seemed to think that I was some sort of linguistic guru who could pinpoint with, postcode accuracy where everybody was from. But what I didn't tell him was that I'd worked as a barmaid in one of the hostelries at Seaton Carew. And I think when he was younger, him and his mates, I think, had tried to get in when they were underage, and I hadn't forgotten him. And we're talking about, gosh, over a decade ago. I didn't tell him that. I didn't tell him that I knew him from his past. But so this guy has gone home and saying that this woman just knew where I was from my accent. But I actually...
She's been stalking you.
So that's really...
Devil, you're a naughty person, you. But in fact, yeah, okay. Well, that's an extraordinary story. That's fascinating. I mean, it's one thing to these people who plot where Elon Musk's plane is flying, which you probably can, if you had access to some, you could track his movements. But that's an extraordinary story. Yeah. Well, I'm very glad you weren't around when I was trying to get a drink back in the day. But that would have been well before your time. So, what a great story! Well, those are the kind of stories that you get out of meetings like Master Investor, and they make them memorable, as you say. So well done, you. That was brilliant.
But I must admit, I will be reviewing the video, the recording of that final panel of the day, because Michael Taylor gave some cracking advice about how to maximize ISA returns, and it was all to do with timing, how much you could transfer across, and so he's really good. And another of the panelists was saying she would love to be mentored, but it feels as though that the youth are mentoring us at the moment. I mean, I know you and I are not old, but that panel was superb. But, you and I were hosting, so we didn't get to see everything, but the videos are coming out. So, May, it's the coronation. Do you think anything's going to be, occurring, or will everyone be just, sort of, will it be passive investment across all asset classes whilst we just put our feet up and attend the street parties for the coronation?
It would be interesting to see what kind of turnout there is. We know that the royal family has been much in the news recently, and if all publicity is good publicity, or all news is good news, if you believe that, which obviously the royal family doesn't, but if you do believe that, then there'll certainly be a lot of interest in the coronation, and I suspect there'll be quite a good turnout, because it's been, a pretty well miserable winter, and it wasn't a great year last year for various reasons, and people always like a party, as you say. So whether or not you're a monarchist, I'm sure there will be people who want to watch the pageantry, which we're still quite good at, I think. And as you say, any excuse for a party, meet those neighbors who you had 2 years not being able to meet. So I think I'm sure it'll be a fun day. I hope the weather improves from where it's been recently. It would be miserable to have it, melting down with rain. But no, I think it's going to be good. I shall be doing that. I'll be watching it, and I will be hopefully having a glass of something not so long afterwards. And because it's on a Saturday, I mean, it's not as if people are taking an extra day off because of the coronation itself. There is the May Bank holiday coming up anyway. But yeah, let's see how it goes. And probably good that whatever your views, again, probably good that Meghan isn't coming, because that would be become a bit of a sideshow. I'm sure there'll be a Prince Harry sideshow as well. But that's another story.
Yeah, and like you say, I think it is dependent on the weather, because it's a bit chilly at the moment, and if it doesn't warm up, I'll be getting in that nest with the wren. It is a thing of beauty. So they've got oak leaves. It's like a lattice work, and they've sort of created an ascending burrow. It's absolutely brilliant. And when I had to go out to my drains were blocked, I had to sort that out, and I could see the wren was watching me, but I kept my back turned to her, so that I
I
didn't.
thought you had a cat, though. I thought you had a cat. Isn't that a bit of
I
a
do, yeah, but the cat's going blind, so
okay? So the
I think
wrens,
I think the rat's okay.
Freedom Day for wrens in your garden. Okay, that's fantastic. Good. Well,
Exactly. So very quickly, so May, we've got the coronation. Hopefully there won't be a sideshow. It's kind of boring now. I don't think, I think Harry's played his tomfoolery out, actually, on the public stage. But what might, do you think it's going to be a quiet month? I'm getting a sense in my waters that it might be a quiet month, unless China invades Taiwan.
yes, that's always possible. Yeah. There is another kind of rather dull kind of issue, which is the American debt ceiling. Remember a few years ago we had this sort of drama about the debt ceiling, where the US government had to shut down because it couldn't, or parts of it did, because they couldn't, it didn't have the capacity to issue any more debt. And wow, whatever happens in May, or the whole kind of seasonal thing, that is a big issue, but lurking behind the financial markets still, not just the US, but the UK government as well, and many other countries in Europe. The question of what happens to their debt is, how much debt we've got, and how much it's going to constrain us from doing the things that we might like as voters or as governments. That, I think, is going to be one of the big stories of this year and next year and the one after. But that's all for another day. And I think, yeah, May. Well, if it's dull, I don't mind dull.
Yeah, I agree. But you've left us on a cliffhanger, but to be discussed in a month's time. And let's see if I can say Master Investor Monthly mashup without grinning inanely like my cat. Thank you very much, Jonathan. It's always a pleasure, and take care.
My pleasure too.